What a rollercoaster 2 weeks it's been for Phunware. After the craziness of last week, the stock opened higher on Monday, but that very quickly disappeared with the company making some very big announcements. Phunware was being linked closely to DWAC stock, and between DWAC dropping and no official announcement of the companies planning to work together, it has not made for a good week for Phunware. As always guys, this is not financial advice, just bringing you information that you might not be aware of, and I encourage anybody thinking about investing in this or any other stock to do your own research before making any financial decisions. If you're new to the channel, hit that like and subscribe button. Now let's dive into this update video and discuss some recent news. For anyone that might have missed this last week and is new to Phunware, they are a fully integrated enterprise software platform for mobile that provides companies the products, solutions, data and services necessary to engage, manage, monetize their mobile application audiences on a global stage. Phunware offers multi-screen as a service, a fully integrated enterprise cloud platform for mobile. Phunware helps the world's most respected brands create category-defining mobile experiences, and its platform touches more than 1 billion devices each month. They have a worldwide customer base across a wide array of sectors that includes many leading companies such as Warner Brothers, ESPN, Intel and PwC, to name just a few, and the recent attention the company has got is due to its work with the Trump-Pence campaign, which is very important and I'll talk more about in a moment. The company is 100% US based and traded on the Nasdaq under the ticker PHUN, and has been featured in many publications and has won many awards. Its products and services include cloud-based mobile software that licenses software development kits known as SDKs. This forms utilized inside mobile applications such as analytics that provide data related to application use and engagement. The Phunware cloud platform powers mobile experiences which impacts every part of the user's journey, helping brands unify their strategy and make smarter decisions. The company also engages the integration of its SDK licenses into existing applications maintained by its customers, as well as customer application development and support services, offering mobile engagement, location-based services, mapping, navigation and wayfinding, content management, analytics and business intelligence, and audience monetization with ads. Integrate easily and start serving display-rich media, video, native and other ad formats in the apps. Now, it has been a very volatile week for Phunware. After initially opening on Monday higher than it had closed on Friday, the stock very quickly dropped to only $4. And I will look at one of the main catalysts for this huge drop in just a moment. Management did something that I spoke about in one of my previous videos that I said would have a very negative effect on the share price. But first, the very latest news that caused a sudden upturn in share price on Wednesday. On Wednesday, Phunware announced that they had successfully completed Epic comprehensive integration process. Its mobile digital front door solution for healthcare is now available on the Epic app Orchard marketplace. Phunware's MAAS digital front door enables hospital systems and clinicians to contextually engage their patients and visitors on mobile, all while providing optimal care, driving operational efficiency and ensuring patient satisfaction. With almost a third of the EHR market and more than 40% of all hospital beds, Epic is a key strategic integration partner for Phunware. Joining the Epic app Orchard makes it easier for Epic's considerable customer base to license the healthcare solutions, demystify the patient experience and drive digital transformation for more than 250 million patients with electronic health records already in Epic. Key features will help patients and visitors navigate healthcare facilities. Doctor and service directories allow users to easily find healthcare professionals and departments, and will allow healthcare providers to stay connected with patients and visitors. And on Friday, Phunware announced that they now accept Bitcoin for purchases of high-performance computers and peripherals provided by its Lite technology that launched Black Friday specials on 4 optimized personal computers designed specifically for crypto gamers, streamers and traders. Phunware had only recently acquired Lite, and I spoke about this acquisition previously. Lite is a profitable, rapid-growing system integrator that enables Phunware to enter the high-performance personal computer market, estimated to be $32 billion market that is expected to grow at a 24% compound annual growth rate over the next 5 years, allowing Phunware to expand potential addressable market and to deploy its decentralized data economy powered by PhunCoin and PhunToken. The acquisition is seen by the CEO as Phunware investing in the resources necessary to develop a decentralized global data economy. So last week, Phunware was one of the most active stocks in the world on the back of sudden investor interest into Digital World Acquisition Corp. If you are not aware of this, DWAC will merge with a new company called Trump Media and Technology Group. The move came after Trump got banned by Twitter and Facebook earlier this year after he was accused of inciting the Capitol riots. That massive interest in the Trump SPAC also created huge interest in any penny stocks that had links to either Donald Trump or Digital World CEO Patrick Orlando. So we've seen huge spikes in the share prices of stocks such as Remark Holdings, Created, and of course Phunware had the biggest gains of the lot due to its ties with the Trump re-election campaign that I mentioned a moment ago. Phunware's market cap went from $116 million to over $1.5 billion in less than 24 hours. Despite all the hype around these stocks, there was nothing confirmed that Phunware would actually have anything to do with the new Trump company. There is no confirmation that Phunware will work with the Trump Media Group at all to help develop the Truth Social Media app, and Phunware has also said that there is no official updates at this time. One of the dangers that I spoke about when this stock had gained so much was the fact that I felt that they might do a share offering. Given that Phunware is not in a good place financially, they might try to take advantage of the renewed interest in the stock at a much higher share price. And that is exactly what they have done after a company filing showed registration for a roughly $48.5 million common stock shelf offering. So let's look at the financials to see exactly why they have done this and why this might just be the best time from both an investor's and a company's point of view. Looking at the company's most recent financial statements, we can see that they have total assets of $34 million, which includes cash of only $2.7 million. In contrast to this, we can see that they have total liabilities of $23 million, of which $16 million is current. If we disregard this goodwill figure, this gives Phunware a liability to asset ratio of 2-to-1 in favour of liabilities, which is not good. And it gets worse when we look at the current ratio, which is just 5.7 million current assets compared to 16 million of current liabilities. Looking at the income statement, we can see that the company has incurred operating losses so far in both 2021 and 2020. So together with the bad statement of financial position, the outlook is not positive. When I looked at this previously, I said that I thought dilution here was very likely given the sudden rise in share price, and this is exactly what they have done. Looking at the notes to the accounts, here is the going concern liquidity and management plans. We also have negative net working capital. As a result, we anticipate that we will need to raise additional capital through our at-the-market offering or by other means to fund operations. The upside of this is that even at the current share price of $4, Phunware can secure $48 million by dilution of approximately 12 million shares. Whereas 2 weeks ago when the share price was below $1, they would have had to dilute by over 50 million shares to receive the same injection of cash. So for anyone that was holding these shares more than 2 weeks ago and didn't sell when the share price spiked up, the company will be in a far better position financially after this than they were 2 weeks ago. And for anyone who believes in this company in the long term, again, financially in a much better position than just a few weeks ago. Looking at TradingView, we can see that over the past week the stock has been very volatile. After hitting a low of $4.20 on Tuesday, it then spiked up to $5.60 on Wednesday, but has been on a downward trend since then, seeing both lower highs and lower lows all week. However, the stock does seem to have a strong support level at just under $4.20, which is very close to the current price of $4.29. This stock is incredibly risky right now, but might well be in a far better position as a company than it was 2 weeks ago. So guys, that brings us to the end of the video. If you've watched all the way through, then hit that like button. It really helps the channel out a lot. What do you think will happen here next? Do you think that Phunware will have a major role to play in Trump's new social media app? Or is this all just speculation? What do you think will happen next week? Will this continue to crash or will this bounce back? Drop me a comment and let me know what you think. If you're new, hit the subscribe button and bell notification and I'll catch you in the next one.